The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman, Tiger Technicians Hour. I do the fourth hour here at TFNN. Of course, we had a fabulous lineup as usual today, and that should be going right on. Today being Wednesday, you've got. Let's see, I'm on now. Oh, then you've got Steve Rhodes, you've got Dave White, you've got Tom O'Brien. Just a great lineup. Well, let's look at the market. Dow's at 57 at 16,847. S&P's up 6 at 1986. Comp index is up 2 at 4750. That's kind of important. Gold is now unched at 1146. Should I say that we're going to do? Oh, we got Daryl Martin. Today's Wednesday, of course. Daryl Martin at noon. I forgot it was Wednesdays for Daryl, and so I just wanted to add that. And so look at gold, GC. Actually, I need to put it into. Let me put this all into the perspective that we want to see. That's D in the 120-minute chart and an E. Okay, it's every once in a while we get a session that I consider has the potential. Now, this is very important. It could just be an ordinary session, but once in a while we get a session whose conclusion, that is the closing price at 4 o'clock, is so important that if other things had happened, it wouldn't be important. But if certain aspects come across, very, very significant aspects, it becomes one of the most important periods over a particular phase. Let me explain why. I'll use the gold. Let me move the 120-minute chart of gold continuous contract has gone to a peak E exactly in the area between 1156 and 1150 that we had targeted as a left side, right side price time move. It went there yesterday, pulled back a little bit and snuck up. Now it's pulling back. The stochastic and MACD are okay, but they've turned down. So everything's been accomplished. Now let me do this if I can just move it away. No, I need to move it away so that you can actually see the notation. I'll tell you why. We're going to do this in a number of charts. So here we got 120-minute chart. Let me explain what we've got. If you're looking at Tiger TV, what we're looking at here, let me use a pointer right there. What we're looking at, let me squeeze that a little bit. Let's squeeze, squeeze, squeeze. And there you are. Most importantly, you see this downtrend line from peak D in the gold contract that on the 24th of August spiked up to 1134 round number and then pulled back very sharply to the 11, I think it was 1096 or something, 1097.70 area on the 11th of September, then screamed up and then pulled back again. That produced a trend line. You remember, let me show you how important trend lines are. This is a chart of the E-minis with only trend lines. There's no 9-period moving average, there's no MACD, there's no stochastic, there's nothing that is programmed. I've drawn in the trend lines that I thought were important. I did them prior. Remember, this is the one that started off with Freeman calling on Friday to say that, Basil, I'm long the E-minis at 1888, and I wanted others, but anyway, he had that position, and that was a fantastic entry point. Why? Because to this morning, the E-mini has gone from the 1888 level over 100 points, 103 points higher. That is an amazing move. All right. So look, here we've got the trend lines and all the patterns. These are the right arm extension. Remember, like a rogue wave, pulls back. If it takes out halfway, then there's a good chance that it'll take out the cup low. It just did that, which is at 1995.50. I want you to show you why certain things are very, very important at certain times. I wouldn't be caring about that long-term trend line when I was there, but then it becomes important when you start to get to 1985 on the 10-minute chart of the E-minis. Now let's go back to our story. So gold bumped into a resistance point that is very important. The weekly chart looks okay, nothing great. MACD and stochastic are rallying. to confirm the move. But in fact, when I was looking at the stochastic and MACD, gold should be at 1163 to 1178. They should be tackling the area of 1169 that was made the week of August the 28th. So far, the move in gold, specifically for some gold stocks, fabulous. Okay. But for the gold chart, nothing much has happened in the monthly. Nothing much yet has happened in the weekly. Nice bounce, only back to just above that trend line support of 1134. We're at 1147 right now. So now let's move aside and say, okay, gold is at a critical point because if it pulls back sharper from this level underneath 1130, it says, ho-hum, we're back in the trading range. Just treat all these rallies as rallies to take profits in and then get out. Now, that's one thing. If, in fact, gold by tomorrow, what's today, Wednesday? By Thursday afternoon, no, Thursday at 2 o'clock, between Thursday at 2 o'clock and Friday at 10:30 in the morning, gold needs to be at about 1160. That would be a very, very important move because it brings in the 200-period exponential moving average of 1170. Now let's move away. Now we're going to go like we always do. We'll start off with the Dow. The Dow, and this is what I said to my subscribers this morning, the Dow should make its way in the left side, right side price time match exactly today, maybe the latest tomorrow, but today, to the 16,934 level. Why 16,934? Because 16,933 was peak C. Peak C held exactly at 16,000 and on the pullback in the daily chart, and now it's rallying up. It also says that you've gotten to leg B in the weekly chart. Okay, now let's go to this chart here. See, this is what I said to subscribers. This is what we're looking at, and this is very important. There's the left side, LS. There's the right side, RS. And what's the time? The time says exactly on this bar, that green horizontal line says to the 7th of October, you've got to hit that line. The MACD and stochastic are still very good, but the stochastic for a leg D is only at 72%. So that makes it very important. Okay, let's move on. I'm going to remove this chart and just show you what I do in my, oh, I think I forgot to put all those notations in. Okay, this is it. A leg F to the downside, right in the horizontal left side, right side price time match of the 120 VIX index. It went down to a low today of 1853. Now it's bouncing. I was asked if I talk about the VIX. I'll try to fit more discussion of the VIX later on. Let's just keep going here. Why? Because the 120-minute chart of the Dow and the S&P just went to leg D in the left side, right side price time match, and it did it in a couple of bars early. But it has to break and hold above. If it does that, that is really, that would be very important. In other words, holding at the 16,009, what was the high today? 16,963. Holding in the 16,960s would be very positive. Okay, let's keep moving. The arch formation that developed into the two cup formations that I had pinpointed has done this time match. It also hit the Chapman wave inside wedge diagonal target resistance line. It's gotten to leg D. That's not a peak D. We have to wait for tomorrow to see if there's a lower high. But remember, I drew the rectangle. I took the rectangle out only because it was starting to look a little messy. But basically, the rectangle is right here. That's that rectangle formation. Let me just have a look and see Tiger TV. If it, I was thinking that it was just covering too many things. Oh, actually, that's good. So there's your rectangle. That says to me that by Friday or Monday, at the absolute latest, the Dow needs to be traveling in the 17,050 or higher level, so that the 17,290s 200-period exponential moving average becomes the magnet. If it can't close in that 17,050 area, that's not a good sign. All right, now you can see why I'm saying the result of today is going to be really important. This happens just periodically, once every 3 months or so. You get a day that is so significant, and I'm going to cover other aspects as to why it's significant. First of all, I need to also give you a sense of, look, the dollar is holding. It's really not doing anything great, but it's making the H to an M pattern that we discussed ages ago. And that's saying to me that if the dollar was, and there's that support that was resistant, that was resistance, and now that support, but that support's going lower and lower. And it's saying that now we've got to consider that this dashed red line right here is going to be very important. You will take it out just by moving sideways. That's really not the issue. It is the crossing of one very important level here to another level that gives you the fulcrum that says right at this particular stage. In fact, I'll just draw it in as a little circle. Right, they're more an oval than a circle. It's saying in this particular period, if the dollar breaks underneath, closes under 95.20, finally, I think you can actually see gold move higher. And that's why it's very important at this particular phase. Let's continue. Now what we're looking at is, within the context of all the different indices, if you go to the EUR/USD, you will see that is also stuck in this little range. It has got the soft W to U cup formations. But the weekly chart says, hey, I'm just stuck in this trading range. I'm more towards the lower end of the most recent range, kind of holding the 9-period moving average. So don't worry about me just yet, but start to worry about me if I make a bigger move up or down. Why? Because the USD JPY, the dollar Japanese yen, is doing the same thing. With, on the one hand, the euro dollar is showing a little bit slightly more bias towards the upside, and the USD JPY, which had followed the dollar very closely before, has now separated itself. That's why I hate to use any particular index as the benchmark for everything, because there are, and that's why when people ask me about my Chapman Wave trend gauge, at some point the numbers are going to change. So I don't want to give out the numbers, because when they do change and you're looking at the wrong numbers, you're going to be in trouble. And that's the same thing here. What we're looking at is that the pattern at this particular point says that the numbers we're looking at might change a little bit, but it would seem that if the USD JPY breaks 119.40 as support, it's at 119.84 right now, down 0.37, that wick of that candle becomes vulnerable and you can go under 119. So this is an important phase. Here we go. The S&P, SPX.X. Look at the S&P. It's gone. I didn't do that. But if you don't mind, I'm going to talk about the S&P. It's way underneath that peak C. It's at 1981, up $1.73. Look at this. The Dow is now only just barely up, and the S&P is up 1.8. That's a huge give back. That's why today was such an important day. For my subscribers, we missed going long a couple of things. Just missed going long. We had them nailed perfectly. But we also missed the short side in that we had the perfect shorts, and a couple of them got taken out, and then yesterday they dropped in certain sectors. So it says the thinking is right, the implementation might be a little bit off. And now I'm going to go to the SPY, and you'll see that the SPY 120-minute chart has just gone to leg D. So this is a very important period. I'll talk about the cyclicals and I'll talk about the healthcare when we get back. Basil Chapman, Tiger Technicians Hour. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, folks, we're back. So during the break, a bunch of things came up, and at the same time, I was moving along. So I just needed to review. I was looking at the SPY. So the SPY went to a leg D this morning. That's the one that I'd notated. I forgot that I hadn't finished notating the SPX, but it's the same thing. So leg D, underneath the previous peak D of 202.89, and the low was 186.93 on the 29th. This is very interesting. 24th was that big down day, but on the 29th, the low was 186.93, 186.93. Yep, 186 on the 29th. So this is going to be very important. And this is, again, the reason why I'm talking about this day as being very important is that because of the move in the cyclicals, which of course impacted the Dow more than the others on the upside, sustainability is absolutely imperative. So a pullback today after such a big move is fine. But it better not last into Friday, because all of a sudden you're going to look at the sideways move and say, hey, this rotational aspect is just continuing. What did someone say this morning? He called it a rolling correction. You know, many years ago, many years ago, I saw Rahsaan Roland Kirk, fantastic saxophone player. I saw him down in Boston on Boylston Street at the Jazz Workshop, was it? Whatever it was. I was a student at the New England Conservatory. I was doing my graduate work there, and I saw him play a note, I heard and saw him play a note that went on for like 10 or 12 minutes. It wasn't a note, it was a down at the bottom of his saxophone register. And I thought, oh, that is amazing. So I figured something must be happening. So I spent that summer working on something that it was called rotary breathing. I called it circulatory breathing because it has to do with the air circulation. And what you do is you breathe through the nose, and at the same time you open the whole glottis area and you let the air go through, so that as you're blowing out, you've got this continuous stream of air. And you can keep doing that. There's a really funny story that I can tell you. I don't want to waste time right now, with the late Gunther Schuller, one of the great American musicians, conducting, and I was playing principal clarinet. I'll tell you, someone remind me about that later on, because it happened right after I had finished working on this. So what happened was I developed this idea that there's a difference between the pump that takes something one way and then another aspect opens up and lets whatever it is, water or air out. So and what's really important at the bottom is that we've got the rotor. This time, it's the wrong time with the rates possibly going up. We know they're not going to go up. But you know what I'm saying? So here's what's very important. And I'm going to go through this. Let me just see if something happened there. Everything seems to be okay. I'm just going to put an okay here. No, let me put an okay here, just for my engineer, because I saw one thing just faulted. Okay, so here we go. Lost your den chart. Yeah, that's what I thought. Okay, I'm coming back with the den chart right here. Click. Click. Okay. So this is very important. You see the spine made the leg D? Now I'm going to go to the IWM. The IWM went to a leg C, possibly a trough C, and the Russell 2000 iShares has got the most terrible chart. It is fading completely.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back, and a little technical problem. They're not quite sure what it is. It happens sometimes. So let me get this away, and now we're looking at the IWM daily, IWM weekly, IWM monthly, covered a little bit by the 120-minute chart. Pulling back just a little bit, no big deal. IWM starts to trade under $11.30 in the next 3-4 days. That's a problem. But so far, the chart pattern says that the IWM is really struggling. It needs, unlike the Dow, it needs to find some leadership, and it's not finding it just yet, okay? More importantly, this is what I wanted to show you. Look at this beautiful red support line. We tested it once, we tested it twice this month so far. It's held. A close at any point in the next 2-3 weeks below 107, there's something else going on completely. But at this particular point, you've got to respect what I call the Chapman wave inside track. Look, here it is, that green line right there, the dashed green line. Oops, didn't mean to do that. Dashed green line right there, and the red line has held. So keep that in mind. All right. Now, here's the next thing. I wanted to look at, I wrote it down here. I wanted to go in sequence. I was asked about the IYT, which is the transportation index. It has also been stumbling. It had a horrible, horrible period from back in, let me see, was that February? November of last year, made a high of 167.80 in the IYT, which is the iShares Dow Jones Transportation Average Index Fund. And then it started to decline. Now, I haven't even spoken about the Chapman Wave Roman candle. These candles already, this is not a perfect one, but it's close. All it says is that if the IYT trading at 144.22 up $1 at any point in the next few weeks starts to trade underneath the low of last month of 136.89. Now, when I say trade, I mean if it starts to close there 2 or 3 days in a row in the daily chart, that'll impact the weekly chart very negatively, which immediately triggers this candle's characteristic trait, which is to say that if you're trading, whatever it is trading within underneath half of the wick of the Roman candle for a little period of time, there's a real good chance that it's going to start a move that takes it down toward the low or even test the low, maybe even break the low. And in this case, it would be a low all the way to 128.26. There'd really have to be very bad news to do that at this point. We've had tons of bad news so far. And in fact, the candle of the positive Roman candle of October of 2014, the 137.05 level, is really far away. It's 7 points away, and that would be very important. So they're all coinciding. That low of October and the midpoint of this candle, as well as last month's low of 136.89. You can see how important all of those support levels are. On the upside, who cares what we've got a crude oil that was pulling back. This shouldn't have happened, right? Well, these things happen. Sometimes the relationship that you're looking for turns out to be a non-relation, and all of a sudden you're stuck with this preconception in your mind. Don't be fooled. Just look at the chart. The chart says very significantly that the major resistance level is the 148 to 150 area. A close in the 152 area in the next 2-3 weeks would say, hey, this can keep the market going for another quite a number of weeks. Now, I spoke about the SPY with that technique that I developed a long time ago, and that's a technique called Chapman Wave price volume spike low. And in this particular instance, that's the low of August the 24th at 182.40 with a huge volume spike. That had said to me that there's a real good chance you can come back and retest the area, but not the price itself, but you will trade higher. It doesn't say how high. It just says higher to sideways for 28 sessions. If you close on the 28th, 29th session above a previously important peak, that would be 202.89 in the SPY, that says you can go for another. It's almost impossible to believe, but it says you can go for another 28 days. Where did I get the 28 from? Now to me, it's just all background. I don't even remember. I spent a lot of time working on why and how. I can't quite recall it all, but I know the numbers, and they've been working very well. So those are the numbers that are important. Talking about numbers, let's go to the VIX index. So now the VIX index on a day like this is it's down 2 cents at 1938. It is holding really well close to the 20 level. 1737 is the 200-period moving average in the daily. 1673 is the level on the weekly chart. And what happens is when I look at this, I say this is the first time in ages. In fact, let me put the weekly chart up. This is the first time since back in October of 2011 that the VIX index weekly chart is traded above 1, 2, 3, 4, 5, 6 times above the 9-period exponential moving average, that black line. But it is also the first time that it's traded for 1, 2, 3, 4, 5, 6, 7. We don't know if this 8th week is going to be the same. This amount of time, because look, in that cluster over there, that was above, that was above, that was above, that was underneath. That was above, that was underneath. So you only traded above it for maybe 3 or 4 times out of 5. This is very different. And what it's saying is that at this particular point, we have still got fund managers buying insurance. That's all I'm thinking of it as now. It's not even a trade. I'm absolutely sure, from having spoken now to quite a few fund managers who are, or people involved in the let's call it the wealth management world. You know, these guys that they give themselves the title of wealth management in that area, that have said they think that all declines need to be bought, that there's nothing wrong. If you go back, and they've sent historically all the different, when the VIX is traded, or the S&P is traded, and 4 out of 100 times, whatever it is, they've sent me a whole bunch of data. And all I can say is, I once drew a cartoon when my days when I was a cartoonist, an illustrator and cartoonist, where the husband is looking at the newspaper, and he looks at and he's looking. That's when you open the business paper to see what the stocks were doing, and he says, it says 1 in 8, 8 stocks were up to 1 down. Oh, that's fantastic. Let me see how my stocks did. And he looks and he goes down, 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 up. And the wife says, exactly like the statistics. Because statistics change, obviously. There's got to be something that goes against the norm. So all I'm saying is, we're going to look at the statistics of the VIX index by a simple measure. A close this week above 1737 in the daily chart is good. 1673 is the 200-period moving average in the weekly. To me, that's not even. I don't even want to go there. It is a close above 2151, the 9-period moving. I'm not looking at the downside. I'm looking at the upside. Why? Because in the rotation of the stocks that are going very well to the upside, like an Alcoa, sharp down day today, just from the intraday, but it's a fantastic move to the upside. And this could be leg F/C. A close. So Alcoa is at 10.74. If Alcoa happens to slide, let me just double check your numbers that I wanted to look at. Did I put that in? No, I didn't. So Alcoa, if Alcoa slides under 10, I would have to say there's a good chance that a chunk of this move has just been done. General Motors, really nice, pulling back, hit the exact left side, no, 1 day early from the left side, right side price time match. It went to 32.52, and right now it's at 30. It went to 32.96, and the level we were looking at was 32.70. So it broke that, but it hasn't held it. In this inverted staple pattern, right? You see the head and shoulders inverted, shoulder, head, shoulder, and that says, if GM is able to travel to the 33.90, 34.30 area in the next week or so, that's going to be a big positive both for the market and GM. So now I'm looking at the weekly chart, and where did it stop? Right at the 200-period moving average. Look at X. X is U.S. Steel. I'm just trying to check something out here. You're 11.95. So trading at 11.97. Today it hit 12.90. This is the first time that the technicals have come from a nice low with a rising stochastic. MACD turned positive both in the histogram and the MACD itself, fast moving average over the slow moving average, nicely above the 9 EMA. But it's the first time that the weekly chart has gone to a trough F with this kind of doji candle. It says there's a possibility. I don't know how it would work in this environment, the slow job creation environment. So I'm looking at it and saying X at 11.98, up 18 cents, is going to be a little bit of a harbinger, a foreteller of whether the cyclicals actually can, in steel certainly, move into the upper region of this very sharp pullback. And that upper region would say it needs to get above 1250, start trading the 13th to say, hey, this is a trend that could actually last a couple of weeks. I'm going to go to Jerry in the Back Bay. Jerry, how are you?
Good. How are you?
I'm well, thank you.
Yeah, I have a weird one that I'm just starting to study, XIV.
Yes, we're very familiar with this. This is the VS inverse VIX short-term ETN. And what it does is the VIX goes, and when the VIX goes up, this will go down, And this is related to, now we've seen, this is a very weird one. And when you say weird, I'm going to say to you, it is weird, but it is an aberration to the actual ETFs themselves. I've seen whether this really relates closely to the Dow and the S&P, and I've seen them both, the Dow and the S&P, moving sharply higher, and this thing was lagging. I've seen this start to move when there wasn't that much movement. So I need to go back and look at it. Boy, this is one of those that I'd love to ask Dave White. He does all this kind of analysis.
It's basically an inverse to the VIX, and it also has an interesting characteristic that with time it actually goes up in value, whereas other things like this on the positive side, they denigrate in value, time value.
Yes.
So if the market just goes sideways, this can actually drift up.
Drift being the word, because it doesn't actually get any momentum, but it could. It can confuse you a lot by saying, hey, what's going on here? But if you look at this pattern, keep your eye, if anyone's looking, look at this on the left here. I'll just grab the SPY. And look at the SPY. Here we go. And look at the chart. And now I'm going to go back to the XIV, and you will see that there's a bit of a pattern there, and it should be following much closer. It's made the U shape, the W formation, but that W formation hasn't got the last leg up, isn't even close.
That's weird. Yeah, that's double weird.
So now, so are you going to be trading this? Are you looking at? I know that it was on my list of the last 2 days.
It's sort of like a hedge where I'm not that positive about the market because it's really complicated figuring out what to buy. All the stuff that money managers own are now technicians are telling them they're going out of favor, and you should go to the cyclicals and the commodities, and nobody owns those, and they don't have any faith in them, so they're totally confused now. And I'm thinking of it playing. If I think the market has a bias upward because there's so many people negative and positioned that way, if I could buy something that would go up, 10% sort of leveraged when the market goes up 4 or 5, but at least doesn't go down. Very complicated.
Right. So we have Sean in the den who says XIV follows the Dow, TVIX, XIV are my primary trades for the last 2 months. Yeah, that's the way. I've looked at this, and I've always discussed this in relation to the Dow and the XIV. I'm not actually sure. It's just a long time that I looked at the mechanics, the internals of the XIV. But that's the way I look at it as well. And that's the reason why I'm saying that keep your eye on this XIV. I'm going to go through the diamonds, the trades like the Dow. Look at the different patterns. It is, I wouldn't even say it's close, but it has the same generic trend. That's really what we're looking at. So I thought this morning, I had the XIV on my list. I took it off. I said, you know what? It didn't act as well as it should over the last 2 days. Absolutely. Right. Yesterday it didn't.
That's right. It should have gone up a lot.
Correct. So now I'm going to suggest to you, Jerry, that as a trading vehicle, why don't you do this? Else. I'm sorry, Jerry, I just want to say, because I'm liable to forget my point here. And my point is going to be, before you actually make a big commitment to the XIV, why don't you just buy a really small little bit so that you actually are following it in a physical way rather than just a mental exercise? Right. Buy, just a couple, 5, I don't care what it is, so that you can actually follow it as if you had zeros at the end of the number that you had bought. And then you will see that it's actually a very disappointing vehicle. But when it's hold on, I want to just finish that thought.
Thank you.
Can you hold on? Yeah, we'll be back.
Okay.
Folks, we're looking at the XIV, and we'll talk about it. The Dow's up 3, S&P's down 21 cents.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi, folks. Great show coming up. Daryl Martin, and it's really worth listening. Different way of looking at the market using price movement, but also using money management in a very specific way. So we're on with Jerry. I said I would look a little bit more into the XIV. So XIV is made either a peak F or a B, and in the 120-minute chart, the chart itself looks like it's an F. It's going to take a little bit of time just to consolidate a little bit. So, Jerry, this is what I'm thinking here. And Sean in the den said that he uses, he's looking at the 1-minute chart, nothing that you would be looking at, but he is using that. And that has, he puts it together, the XIV and the TVIX, that's the VIX 200% along. And he puts it together with, he said, the PSAR. Oh, that's okay. I understand what that is. The PSAR is the SARS. That's the little dotted line that you see sometimes in charts that says if you break it to the upside or the downside, you can take a position. So let me just do this. I wanted to clarify a couple of things. The XIV is a way of trading the trend, but I want you to understand that it's a very shaky thing. Sometimes it's going to give you a little bit more than you expect on the upside if the Dow keeps going up. I think what happens is if you get the majority of Dow stocks moving to the upside, that's when it does best. And if there's a real mix within, you'll see that reflected. It's almost the way I look at the XMI index, the major market index, because it's got the relationship of defensive stocks and cyclicals as well. So I think that's the kind of mix that is reflected much more in the XIV, but maybe I'll send Dave White a question because he's the one that does a great analysis on all these technical things. So let me do that. And I just wanted to say to you, start small, get to understand it. You might be able to treat it as a terrific vehicle because you've got a feel for it, even though it participates slightly differently to the actual index that it's following.
You really helped out because this isn't acting the way I would have expected it should have gone up more.
That's why I wanted to make a big deal that don't expect, the expectations are not going to be, if you've got a preconception in your mind, be careful because it doesn't behave the same way as you would expect.
Thank you very much.
Thanks for calling, Jerry. Always a great question. So let's do this. We're going to go right back to the VIX index because we're going to wrap up here. We're going to go to Daryl, Diagnostic Trading Hour. So the VIX index is 1919 is down 21 cents. What's really important to me is the 2144 9-period exponential moving average on the upside and the downside 17.37. That's the support that I'm looking at. If it breaks those by Friday's close, it's going to impact the weekly chart quite a lot. And what it's going to say is now I must look a little more closely at the stocks like an Alcoa, like the cyclical, like a USX, like a General Electric. Look at General Electric today. Leg D, little doji candle says, hey, I might be ready to pull back. I've got a C, D, a leg E to the upside in the 120-minute chart. I might need a little bit of a rest here, but if I only take a momentary rest in GE at 27.46 and I pull back to the 9-period moving average, the 200-period moving average between 26.12 and 25, let's call it 80, and hold and then start another move to the upside, I have to respect that as a kind of a market indicator to say there are enough internal strengths to keep us going. Remember the SPY? They can go from 28 days maybe to 29 to 56, but that's only if you only got a couple of days left in the SPY to do it. It needs to break decisively. The SPY needs to close in the 203 to 204 area. I would have to put that by Tuesday of next week at the latest. If it does that, we can go sideways for another few weeks. So I hope that helps you on the downside. Anytime the SPY starts to break 195 support, watch out for that. But this is a mixed market. The healthcare area is in trouble, and you see cyclicals move. Hey, thanks for being here. Have a wonderful day. Check out my opening call, and I'll be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.